So we'll start with the first case study with respect to 9C. ABC Limited has undertaken following transactions for 21-22. Those are supply of taxable goods worth 1 crore from Maharashtra, supply of taxable goods worth 50 lakhs from Gujarat, 1 crore worth sales as casual taxable person from Rajasthan. Then there are some purchase return for which outward supply invoice has been raised from Maharashtra. Then there is bank FD interest. There is profit from sale of securities, sale of land. There are also a couple of residential flats which the company owns, which are vacant, so they have decided to sell them off. Now there is a question which is before the company, whether they need to file 9C for Maharashtra or for Gujarat or for Rajasthan or for all the three locations. How do you compute? What are the exemption turnover under 9C? So basically, this is the query, and on this we can have, I think, views of everyone. Whoever wants to participate can raise their hands, so we can unmute them.
Participants who would like to participate in the discussion, please raise your hands. We'll unmute you from here, and you can.
Friends who are here with us physically, you can please raise your hands and give your views on this plan. I think the first question is regarding whether we are required to file 9C, both either of what is the requirement given certain transactions which are into Schedule 3 considered an exempt supply for the purpose of reversal of input tax, but whether are part of the aggregate turnover or not. So, friends, we invite you.
Pandit has raised his hand.
Sir, according to me, the supply of goods from Maharashtra will be included. The supply of goods from Gujarat will also be included. The supply of goods from Rajasthan will be included. And the interest on bank FD will be included, sir.
Okay. So all others like profit from sale of securities, sale of land, sale of residential flats, and tax invoice issued for purchase return, you are excluding, and rest all you are including. Am I audible?
I'm including.
Yes, you're. Yeah. Archit, why wouldn't the tax invoice that have issued return transaction should not be included? Although it was purchase return, but I have put it as an output sales for my records, even in my books of accounts for that sake. So shouldn't that be included?
I agree, Sumit. Although it may be a purchase return for me, but once for GST purpose, see, under GST now, many people have adopted this practice. What happens while having a purchase return, you need a credit note from the vendor, and then the vendor needs to make sure that you have reversed the credit. So to come out of all these compliances, many people have adopted this practice of straight away issuing a tax invoice for returning the goods. So in your books, you may treat it as purchase return, but once you have issued a tax invoice and shown it as a sale in your GSTR-9, in my view, that will also be counted as a turnover. That may not become as your turnover in your books because you may adjust it from your purchases. But for GST purposes, I think it will be included.
But sir, when you issue the tax invoice for the purchase return, how you can show it as a purchase return then?
Yeah.
In the financial year, you have to show it as a sale only.
It's a sale. That's the point, sir. Yeah. Actually, it was a transaction whereby, let's say, I had purchase return from Archit.
But and it's issuing a purchase return.
Many people are doing that actually. While preparing the books, they are showing it as a purchase return. They are reducing it from the purchases.
No, that's what I'm saying. No?
Yeah,
that is wrong.
That
will be wrong.
That's an incorrect.
No sooner you reduce it from the purchases, then here you are showing it as a sale.
Correct.
You are raising tax, collecting tax.
Correct.
So it amounts to sale of goods. No?
I agree.
You can also reduce from the purchase.
Yeah, so that is an accounting methodology which is wrong, but as far as the GST is concerned, it will be considered as an outward supply. And therefore, it will probably come in your reconciliations also. if you are showing it on the purchase side. But yes, for the purpose of aggregate turnover, it shall be included.
Mr. Satyendra had also raised
Mr.
that.
Satyendra, raise the hand if you can speak up.
Mr. Satyendra, if you want to contribute something, you can please unmute yourself. I think it could be possibly an error by which you raised the hand.
Anybody from here?
Someone has written in chat box, aggregate supply includes exempt supply. Exempt supply includes non-taxable supply. Sale of land and residential flat are not non-taxable supply, but transaction which shall not be treated as supply, non-supply. The column 5 non-taxable supply includes non-supply does not say so. What is the conclusion?
So whether he wants to include the sale of land, etc., in the turnover.
Yeah.
So I think that is how we go about GSTR-9 table 5. Although non-taxable supply has been instructed over there that you should include your no supply also over there, transaction of no supply, which will entirely include your sale of securities and sale of land and residential flat.
Correct.
So sale of securities not being goods or services, it could be supply, but it's neither goods nor services.
Yes.
Sale of land and sale of flats are scheduled 3 transaction activity not to be treated as either sale of goods or sale of services, supply of goods or services either.
Correct.
So for the limited purposes of section 17 and reversal under rule 42, these are regarded as exempt supply only for the limited purposes of this reversal of input tax credit. So can that limited purpose be applied to the extent of the term aggregate term as defined under section 2 to mandate me to file my 9 and 9C? My answer would be a bit difficult. No, that it shouldn't be applicable. If otherwise you were definitely covered by 9 and 9C, then you report these transactions under no supply, but merely for the purpose of whether I'm required to file 9C, I would say no.
I fully agree, Sumit. Because all these transactions actually are neither supply of goods nor supply of services. And once they are not a supply itself, there is no question of them being included for the purpose of aggregate turnover. If you see the definition also, that definition also I have reproduced over here. Aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supplies on which tax is payable on reverse charge basis, exempt supplies, export of goods or services or both, and interstate supplies of persons having the same PAN to be computed on all India basis, but excluding taxes. So basically all this can be, only which are supplies can be included, something which is not a supply at all cannot be included. As you have rightly said, for the limited purpose of reversal of credit, yes, I have to consider these items. But when it comes to my aggregate turnover for computing the turnover limit for 990, these items will not be covered. So maybe to summarize, the last 3 items, that is sale of residential flat, sale of land, profit on sale of securities. These 3 items will be excluded. While interest on bank FD is an exempt supply, it will be included. And this is a vice versa situation. So if you see, for the purpose of reversal of credit, you don't have to consider bank interest FD. But for the purpose of aggregate turnover, it's an exempt supply. So you consider that purchase return, as you have issued a tax invoice, that will be covered. Sale of 1 crore from Rajasthan, Gujarat, Maharashtra, everywhere will be covered. And you have to see Pan India turnover, and you have to, once your Pan India turnover is more than 2 crores, then annual return is to be filed. And if it is more than 5 crores, then 9C is also to be filed. Now, one important thing in this is for Rajasthan, you have to include the turnover, but you don't have to file GSTR-9 as it is a casual taxable person. And section 44, which applies to 9C, it categorically says every registered person other than ISD, person paying tax under 5152, or a casual taxable person. So basically for Rajasthan, the company need not file any 9C, but the turnover of Rajasthan will definitely be included while computing the 9C applicability for Maharashtra and Gujarat. Right. So I think that summarizes, sir. You want to add? Yeah.
No, I fully agree with the views. Only with respect to, so probably when you compute, there will not be 9C,
Right.
because I don't think it will exceed 5 crores. But 9 you'll have to file, and Rajasthan you need not file 9 because you're specifically excluded. As far as the only controversy about that outward supplies, which is actually purchase return, once you issue a tax invoice, it will be treated and you're reporting it also as, and the other person is accepting it as a credit. So going back, you cannot say it is my purchase return.
Right.
So you will have to go with it and treat it as a part of your turnover. Otherwise, of course, and with respect to the exempt turnover, which is to be included for the purpose of 42. So when the section is specifically saying that for the purpose of reversal only it is to be treated as exempt supply, you would not be treating it as a part of tax aggregate turnover. And even while reading combinedly those provisions with aggregate turnover, it is not a taxable turnover. It is also not an exempt turnover.
Right.
But for the purpose of reversal, you are treating a certain percentage of things as, or for the purpose of reversal, you are considering it as exempt, and therefore the last will be excluded, and it will not be included. That 1% will not be treated as part of exempt turnover, although it is exempt turnover for the purpose of Rule 42. Right. So I think 9 will be applicable.
So we have a few queries related to this question. Should we take up?
Yes.
And as and when the other queries are relevant, that at that time we will take up.
So otherwise we'll lose track
Yes,
of
yes.
later on. If we
So Mr. Jigasha has put forth that they have an NBFC company and the GST turnover was nil during the entire year. Brokerage income was nil. They filed nil return, but the interest income is crossing 5 crores for them. So they are required to file 9 and 9C.
Yes.
Since the interest income is crossing for 5.
Yes. Even the exempt income is part of aggregate turnover, so you'll have to file 9C.
Okay.
Someone has written, Mr. Nilesh Sabu, can bank loan will not be treated as transaction in money and hence not supplied accordingly? Yeah, bank loan is loan amount will not be considered as part of your turnover. Receiving loan is nothing. This is treated as an exempt turnover.
For the sake of argument, bank loan itself being charged, I think it's excluded from the purview of transaction money. That's why interest has been exempted from the purview of this part.
Right.
So one architect question here, the definition of non-taxable supply. If it is read it. So for the purpose of understanding what all things it will include. They have mentioned it is supply of goods or services of both, which are not liable to tax.
See, I don't have the definition over here.
Liquor, petroleum.
Yeah, but
only the aspects or it can do something. See, as far as Schedule 3 item are concerned, which Vikram sir told, we are considering it for the purpose of reversal. It is coming from section 17.2.3.
Right.
But if I just have to read this non-taxable supply, which is part of exempt supply definition, so it will include only petroleum and liquor and nothing else apart from that.
Correct. So see, non-taxable supply, it says means of supply of goods or services or both, which is not leviable to tax under this act.
Won't be part of this definition.
Right, because it has to be first a supply of goods or service, and only then it can become a non-taxable supply. And Schedule 3 per se starts with saying that it is neither supply of goods.
Schedule 3, I think it's not including securities, right?
Securities are the definition of goods and
Goods and
services.
services.
Yeah.
In definition of goods and services.
See, if you see on the screen, I'll just share the definition of goods. You can
We
see
have
on
on the
there also.
PPT over there.
Means every kind of movable property other than money and securities. So it is not goods, securities are not goods, and then services means anything other than goods, money and securities. So in both the definition, they are excluded securities, and therefore it is again neither supply of goods nor supply of services.
It could be supply of securities, but not
Right.
supply of goods or services. And this is where under intermediary definition, they have included intermediary for security separately.
Because earlier we were getting one view saying that even non-taxable will include more supply. There was one contrary view.
Only for the limited purpose of reporting
For
and crime.
17, yeah.
No, and even for reporting in GSTR-9.
Then there are specified subsequent. You have to include no supply.
Correct.
Because no supply is not defined in law.
Right.
That's it.
over there, if they do not include that now, then it will show you a mismatch between 9 and 9C. When you, because as per your books, these income will be there, and as per GSTR-9, these income will not be reported. So it will show a gap. Either you show it as a
Yes,
5
will still be there because there we have to inject no supply. I have to give transaction and security the sales value. And what is in my books is only profit. So there will be some.
Again, that variation will be there. Then we'll show some adjustment in table 5.
Yeah.
So if we report this non-supply, no supply, no goods, in the exempted this columns, in the 9 in form number 9, how they will come to know whether it is
No, it is not in exempted. There is
it's not exempted, but it has to be included in the exempt column.
No, separate column for
9.
Actually,
yeah.
there is a case study for that also. For these items, there is one case study. So, sir, we'll cover that in that case study. Right? I think we move to next case study.
Yes.
Okay. So, DEF Limited has reported the following tax figures in GST returns for 21-22. GSTR-1, they have reported rupees 100 as the tax amount. In books, the correct figure of the tax liability was 120 rupees. In 3B, they have reported only rupees 70, that is, they have paid lesser tax. And rest 30 rupees they have paid in 2022-23. Now, rest only 30 has been paid. That is to match with GSTR-1. Still 20 they have not paid. Now, the company wants to know how to disclose the same in GSTR-9C. First is what will be the basis, what will form basis to declare value in table 4. That is details of outward supplies and how to deal with tax of rupees 30 paid in financial year in July 2023. Now we'll just read first these two questions. We'll discuss these two and then we'll move on to the next one. So now the correct figure as per books is 120. In GSTR-1, the assessee has declared 100. In 3B, he has paid 70 in the financial year and 30 in next financial year by July. So in such a scenario, how to declare the figures in table 4 of GSTR-9? Basically, this is the table 4 of GSTR-9. So we can have discussion. Whoever wants to participate can please raise your hands.
I think in table 4, the amount reported will be 90. Whatever is as per books, reduced by whatever is declared in subsequent year.
Okay. So there is a view that in table 4, rupees 90 will be declared because you are saying 120 minus 30 which was not paid. All right.
Which is paid subsequently.
Which is reported in subsequent year.
Okay.
So that you will report in
Table
table 10, 11.
We can have other discussions and then maybe I can give the view if anyone else also wants to
Arrive at the same figure, but with a different way of arriving at that figure. It's like whatever taxes you have paid in GSTR 3B during that financial year 70. With that, the differential figure which you are now wanting to report, which was missed out completely, that figure is to be reported in table 4. Any taxes that you paid during April to September of the next financial year, you report in table 10, 11, 12, 30, whatever is the relevant table at that point of time. That is how I look at it.
Right. Any other?
The 50 same, the answer is same, but the way of coming to it is something else.
Right.
So for me, it's like GSTR-1 is not having so much material effect. It's GSTR-3B and the books of accounts.
Correct. So even I agree. In table 4, rupees 90 will be reported because that is the difference. Basically, the difference, the way of arriving it is you are supposed to show 120 rupees in table 4, ideally. But since you have already paid 30 rupees out of that, which you will show in table 10. So in table 4, you will show the differential amount of 90 rupees. So that 90 plus 30 shown in table 10 will match with your total GSTR-9 with your books. So your 990 will tally accordingly. I think someone has written show liability of 120, pay rupees 20 by DRC03, show rupees 30 in.
No, but they are trying to put 120 in table 4.
Yeah. But that was unless they understand that it was for the books. So I think Mr. Prashant Gura has written show liability of 120. Are you saying liability of 120 in table 4 or and show rupees 30 in table 10?
So the turnover will become 150.
If that is how we show, then the turnover, yeah, total turnover will become 150.
Friends, who are logged in online, we'll request you, instead of typing in your answers over there, since we are dealing with some figures over here,
Correct.
it will be quite beneficial if you raise your hand and have a one-to-one conversation with our panel, speakers who are here with us, and also the friends present physically over here with us. So that will help expedite this discussion.
Ramesh Kumar Jain has raised his hand.
Yeah.
So you can unmute yourself and.
Ramesh ji, you can unmute yourself and put forth your view, sir.
Hi, sir.
Hello.
I will also go with the same figures, but only in table 9, tax payable column. So what should we report in the tax payable column? Should we change it or?
No, I'll tell you. So in table 9 tax payable column, it comes from table 4N.
Yeah.
Okay. So tax payable flows automatically from 4N, which will show 90 rupees only.
90 rupees, yeah. And then in subsequently in 14, differential tax paid on account of, no, sorry, no.
So I'll just complete.
Okay, sorry.
Yeah, just complete over here. So your tax payable in table 9 will show 90 rupees. Then column number 3 to 7 of table 9 are freezed. Okay, that comes from your GSTR-3B and it will show 70 rupees because that is what you have paid. So your table 9 will show a short payment of 20 rupees which you are supposed to pay through DRC03 or whatever, through your maybe that month's return or through DRC03, ideally through DRC03. So basically the 20 rupees gap which was there, it will get plugged and it will get detected over here in table 9.
Okay, sir. Thank you.
30 next year. So the 20 has never been paid.
20 and this goes to 9 now for the first time in 9.
Action here in scan department tomorrow say I have shown in GSTR 100 rupees. Now I am saying it is 90 here in table 4. So I have given excess output, like other persons have claimed more ITC. But the GSTR one we are ignoring as of. But can the query be raised since you have shown 100 rupees in GSTR 1, now you are saying it is only 90. Of course, other subsequent reconciliation is there. But then you have passed on more ITC to the other persons.
No, I think ultimately the tax which you are going to pay is on entire 120. That is what I have to justify to the department. That 90 I have shown in table 4, 30 I have shown in table 10, and 20 I am paying separately through DRC03. So the total of all three is 120. On the contrary, I have passed on
benefit of
only 100 to the recipients. 20 I have never declared in GSTR. So to that extent, in fact, department will catch hold of the recipient and ask them to reverse the credit. Yes, sir.
So what I will go with the views which you have given. I fully agree on that. That means when you show the entire turnover 120, in 9C there will not be any difference. Now having not been a difference, okay, the difference is 0, and still you will be reporting DRC03. Now when you have only 9, that methodology is absolutely fine because the difference will be shown and you'll be paying this. When you have 9C, what will happen is that 120 will match with the 120.
Right, sir.
Okay, and there will be no differences.
Right, sir.
And in spite of there being no differences,
right,
there will be a payment of 20 rupees by way of DRC03.
Right.
So when we do not have 9C, this methodology will work perfectly fine because there will be a difference,
okay,
which we are paying by way of DRC03.
right.
But when we have 9, then actually what is happening is we are reconciling our annual return, okay, while filing 9C, because the reconciliation of books and the returns is showing a difference of 20 rupees, which we have reconciled and now paid 20 rupees.
Right.
So when you have 9C, there has to be a difference for you to go to the tab and pay DRC03, or in the alternative, you will pay the 20 rupees beforehand by way of DRC03 and then file it and show it, not as per annual return.
Correct.
Because here there is not.
Right.
So
Right.
it's just a jugglery of figure.
Right.
I fully agree with what views we have given.
Right.
But I'm just trying to explain that when you have 9C,
Right.
you will all along say that there is no difference.
Right. Right.
The reconciliation is perfectly matched.
Right.
Whereas in fact, there is a difference of figures. That's the only thing. Because of course the form is set in such a way that, and he's asking you, because we can't have two answers, one for 9 and one for 9C.
Right.
So we are having a uniform answer over here.
Right.
Yeah.
I want take so why there is no difference in that table 9 of 9C, the tax payable column over there. Why the difference is not arising? Because what I perceive this 9C to be a reconciliation between your books of accounts and the annual return that you have filed.
Yes.
Let's go legally. Practically, we may be preparing 9 and 9C both at the same time, but legally it's supposed to be 9 that is to be filed by the entity, and 9C is to be prepared and filed by the auditor. Okay. So once 9 has been filed, where
that logic of 9s being filed by the auditor is now done away with. So everything is being filed by the taxpayer.
So now with that, let's say coming to that as well, sir. So having filed my 9, I have already accepted a total tax liability of 120.
Absolutely.
90 in table 9, 30 in table 14, 15, whatever is that table over there. So 120 I have already accepted as my liability as a payable. And I've paid it certain means either from 3B in subsequent year or DRC 03. Post facto, coming to table 9 of 9C. Now, if there was any mismatches in the values or the rates or something else, that is where the auditor would have recommended that if, let's say I was the taxpayer, I have declared as per 12%, but you as an auditor thought it was 18%, you would have put it as a 18% classification. Thereafter, still there would have been unreconciled difference in the tax amount, not in the taxable values. Or if I had not accepted certain part of my liability and you still feel no, that is payable. So that is where the difference could have been. Now, since the auditor has gone out, so by default, it will match, always match. Unless there is an error committed in filing 9 itself.
No, I mean, I'm fully with you. I'm just trying to highlight that since the form was designed in such a way, so we are giving this answer. But apparently in 9C, there will 99% never be a difference now.
Unless until there is audit certification and there is a difference of
certification is not there now. So now, practically, when you file 9C, if you file your 9 correctly, you'll never find a difference in 9.
Yes.
So practically, 9C is merely filing of the form when you have done everything in 9, probably.
So to add to it, I feel, as you have rightly pointed out, there will be no difference between 9 and 9C, and I think that is what is the purpose behind that also. That while filing 9 itself, now you have identified, you are aware of your liability, so you please pay it, and then you file your 9 and you match it with your 9C. If there is no 99C repo available, then what the assessees will do is they'll always show 100 rupees, they'll continue with that. Because of that 9C pressure of 120 rupees to be reported, they will pay that differential tax and then they will move forward. Right? So, I think one more.
Mr. Anil has raised his hand.
Mr. Anil, if you can unmute yourself. Yes.
Yeah. Sir, good evening. Anil Drone here.
Good evening.
Good evening. You see, one more complication. Supposing I have 10 rupees of earlier year, which I have paid through 3B of this year, and that is included in paid. In table 9, it is included in paid. 10 rupees of earlier year, which I have paid in this year 3B. So, as a payable, what should I show? After reducing 10 or what?
So, in your payable, so that means the GSTR-3B, in this example, if we do that, your GSTR-3B will show 60 rupees for current year and 10 rupees for previous year.
Yes.
Right. Now you have paid balance 40, I am assuming in July 23.
No, that is 30 only paid. In July, 30 only paid.
Let me try to simplify and complement at the same time. Let's take 2021 with 2022.
No, I'll
for 2021, I had paid 40 rupees worth of tax in my 21-22. So effectively, my tax paid in 3B was 110. My liability was 100 shown in my 1. Out of 110 shown in 3B.
In 3B, it was paid 100 only, which includes these 10 rupees.
Table 11 में 10 minus 1.
I'll tell you. 1 minute. So I'll just again repeat the figures for everyone. In this example itself, GSTR-1 will, I'll just 1 minute. Go back to my PPT. Okay, so in this GSTR-1 remains 100, books figure remains 120, 3B 70 rupees is paid, but that 70 includes 10 rupees from last year, and 30 is paid in 22-23. Am I right, Mr. Ali?
You can take, instead of 30, you can take 40 also.
Okay.
But you take 30 only. You take 30 only.
Okay. So in short, you have your liability was 120. You have paid 60 during the year, and 30 you have paid afterwards. So while filing GSTR-9 in table 4, you will again show 90 rupees only. Sorry, 100 rupees will show over there.
90. 60 plus 30, which I'm disclosing now through DRC03.
No, sir. So in table 4, you will show 100 rupees because that is what your liability, out of which you have paid 30 rupees in 22-23, and balance you have to pay now. See, you have shown 60 rupees over here.
60 of this, 30 of DRC03 and 30 in 2023 table 10-11, 120.
No, in table 9 there will be a difference of 30 rupees.
Exactly. So
Yes.
Right.
That is where the problem is.
Sorry.
In GSTR-9 there will be 30 rupees difference, but actually you paid 40 rupees.
And table 9 there will be a difference of 30 rupees.
30 rupees.
That 30 rupees difference.
How to disclose?
In 9, table 9.
I'll tell you why the difference 20 ka aega table 9 mein. Because your tax payable in table 4 is 90. How 90? 60 which are paid in 3B for this year only. 30 which I'm disclosing now and paying through DRC03, 90 rupees. Out of 90 as tax payable, I have paid 70 in my 3Bs. Now that table 9 shows a difference of only 20, but I have to actually pay 30. 30, right? You have to pay 30.
Yes, that is the catch. That is the catch.
September 22. Repeat in table 10. So 90 in table 4, 30 in table 10, 120.
90 in table 4. So your table 9 will show only 20 rupees back.
20 difference, but I have to actually pay 30.
I have to actually pay 30.
Because
So
table
to that
9
extent, there is another RICO. There is another RICO we have to maintain.
30 which I am paying now in table 10, how would I reduce that in next year?
No, that's right. That will come in table 10, so you will be able to reduce from next year.
No, sir.
This
30 which I am paying in table 10, how would I reduce in my 22-23 annual return table 9 paid column?
Correct. You will not be able to reduce that.
There was no amendments in 22-23, so my payment would be showing as excess.
Excess of.
Whereas actually it is not excess.
That's right. That's right.
So that GSTR-9 is not configured to
Because
take
that
into
table
consideration
9,
balance sheet.
yeah. That table 9 figures are freeze. That will come directly from your 3. Correct.
So, do you mean to say that we should not pay any previous liability through 3D? We have only paid by.
No, you should. You should.
No. What I mean, if you want to match everything, all liabilities paid after the period you pay by way of the RRCs. No, but then how will you show the turnover? No. The question is how will you show the turnover if you do that?
So one recommendation that I will give it is that if your 1 and 3B parallel, keep it simultaneous. If you want to amend something, if you have forgotten one, forget it in 3B also for this month. Don't try to save on interest. Otherwise, this 1 3B ka jhol jamega will take you to some place.
Or many people follow a practice of paying through DRC03 separately so that it's an identified liability.
Yes.
Where
How do you do it in paid?
Yeah, that will not come in paid. In your table 9, the difference will be there. And to that extent, you will have DRC03, which will show that you have already paid.
All these DRC details you are earlier could have disclosed in part B of your 9C if there was auditor reconciliation that so and so DRC has been filed, so and so tax has been paid. But now there's nothing. The officer does not get that intimation.
When you pay the DRC03, the officer gets the intimation, but that is not correlated.
They don't act on it.
They don't act on it. That is the definition.
Okay.
Sunil Kumar Shah has raised his hand.
एक्चुअल लायबिलिटी थी 100 रुपीज की और टैक्स पेयर ने 120 रुपए पे कर दिए 21-22 में. उसने हेलो
रिवर्स यस मैम कंटिन्यू हाँ बोलिए मैम
हाँ तो उसने 120 रुपए पे कर दिए, लायबिलिटी थी 100 की। नाउ आईएएफ का टाइम लिमिट पूरा हो गया, क्यूआरएमपी में ऑप्ट किया हुआ था, तो आईएएफ का टाइम लिमिट पूरा हो गया, तो उसके पास अब कोई ऑप्शन है क्रेडिट नोट अपलोड करने का?
नहीं, क्रेडिट नोट नहीं, लायबिलिटी अगर आपकी 100 की थी और आपने 120 भर दिया तो फिर आप नहीं। अगर आपने इनवॉइस 120 का बनाया है और फिर आपका रिड्यूस होकर 100 होता है तो आप क्रेडिट नोट बनाएंगे 20 का, और उसमें आईएफएफ की देखी जाएगी, उसमें टाइम लिमिट आपको सेक्शन 34 की देखी जाएगी, विच इज नाउ 30th नवंबर।
बट 30 वो GSTR-1 में अपलोड 38 नवंबर 2022 ना,
2022 for 2022 it will be 30th November 2022.
So we disclose them return by 30th November.
Correct.
मतलब अक्टूबर के रिटर्न में ही डिस्क्लोज करना है, पर वो रिटर्न आप 30th नवंबर तक फाइल कर पाएंगी। अगर आपने पहले कर दिया तो पहले दिखाना पड़ेगा।
नहीं बट वो क्यूआरएमपी में है तो आईएएफ का टाइम लिमिट तो पूरा हो गया।
हाँ तो सितंबर हो गया, तो सितंबर है उसकी टाइम
क्वार्टरली।
और अगर सितंबर मतलब नहीं दिखाया अभी तक तो कोई ऑप्शन नहीं है?
नहीं तो रिफंड का ही ऑप्शन है मैम।
ओके, GSTR-9 में करेक्ट लायबिलिटी शो करके रिफंड अपने।
हाँ जी हाँ मैम।
Yeah, Vikram sir. Regarding the earlier question, the 60 and 10, the 10 of the earlier year which has been showed in 3B, sir, there is an instruction in GSTR-9, the instruction 2A, which states that the preceding financial year figures should not be included in the current GSTR-9. So that has been introduced from 2020, I believe. The new instruction.
What you are saying is correct, but 9 में figures auto populate होते हैं आपके payment के।
Perfect.
मैं मेरे turnover में नहीं include करूँगा, okay? But tax payment क्या है? वो तो auto populate होता है ना?
Yes, tax payments, tax payment का columns will get auto populated, but the tax payable columns we can put. So
current year की दिखा रहे हैं।
Current year, yes. So as Sumit had rightly said, the 60 plus 30, जो additional liability 70 plus 20, वैसा 60 plus 30 and 30 in the table number 10. So 90 in table number 4 and 30 in table number 10, I believe.
But when you go to table number 9, your liability will be 30, but you already paid 10 extra of last year.
Yes, that is okay. That is okay. That will have to reconcile with the previous year's GSTR-9, I believe.
No, that is true, but you have to keep a record with you that it was regarding previous year difference.
Yes.
सर 10 रुपए के लिए बोले, मैं बोला लास्ट ईयर 40 रुपए का भरा था, लास्ट ईयर 40 मैंने भरा है 21-22 में। So your table, but still you have to pay it.
That's right.
Because while you're taking that tax paid figure, you need to manually reduce in your internal records what taxes you showed in table 10 and 11. That you have to maintain internal records, and based on the internal records of that opening balance, you make the differential payment of taxes. Right. Just don't have a blind reliance on this table 9 at all.
Right. I think Krunal wanted to say something.
Yes.
Right.
Go ahead.
To the next, we can go. So in this, will it make any difference if the tax is instead of July 22, if it is paid in December 22?
In that 3B.
Yeah.
Where do I disclose?
That differential 30 rupees, which you have paid in 22-23, if you have paid it in December 22 and not in July 22.
So you have also shown it in the 3B of December 23 or
December 22? Yes.
Okay.
Yes.
December 22.
Yeah. Instead of July, I have shown it in December, basically. So then what will be the impact of that?
So since while we are taking DRCs separately, but GSTR 3B payments, which are beyond September, the timeline of September and all these things, would it be challenged whether we can put that in table 10 and 11?
That's
technically They are not. They have put it excluded out of there.
Yeah.
We cannot. We have to take refund for that.
No.
We
Why should I take a refund, sir? The only problem is how to disclose my 9
Yeah, right.
So I'll tell you what will happen. If you see the heading of table 10, 1 second, I'll just move my slide also. The heading of table 10, it says particulars of transactions, slide 11. Particulars of transactions for the financial year declared in the returns of next financial year till the specified period. Okay, now this specified period was September, which has been extended till 30th November now. Okay, in fact, that amendment has also come yesterday itself in the returns also. So you are declaring it in December. So one view is because of this heading that 30 rupees paid in December 22, you don't show it over here. So the impact of that will be your total of GSTR-9 will show only rupees 90, and your table 5 of 9C. Okay, the total of table 5 turnover as per books, it will be 120 rupees, and it will show unreconciled difference of 30 rupees, and whereas you have already paid that tax. Okay, that is the one way of showing it, and then in the unreconciled turnover reason you can write that rupees 30 tax has already been declared and paid in December 22 returns. Other way of looking at it is we ignore the heading of this table 10. Although it says till the specified period, the heading says transactions declared in next financial year till the specified period, yet we show that amount in table 10 itself, and the effect of that will be your total of GSTR-9 will be 120 rupees, and your total of 9C will also be 120 rupees, and there will be no difference. So these are the two ways of presenting it. We can discuss on this.
Yes, in that case, they can issue the notice, sir, because they don't have the record of paying 30 rupees up to the specified date.
You are right. Notice can come.
Yeah.
Nowadays, we are seeing a lot of system-generated notices which are being issued. That can come. Someone can see my remarks written in unreconciled difference and can without issuing notice can ask me to justify.
When it is said specifically that up to specified date only, so we cannot report that.
So, but the thing is that the turnover in 3B does not give any bifurcation vis-a-vis period. So whether the turnover of this month is shown in December, because he is fair enough and a good taxpayer, he is giving you the actual thing. Otherwise, the same turnover can be included in April to October now, and then the December turnover is the differential which has been left out between April to September. So practically, I mean, though legally what I may be saying is incorrect, but practically you need to show it in 10-11 only, and you will have to say that, internally you may know that December 23 में declare किया है for your internal purposes. Okay, and you may pay interest voluntarily till that period. But otherwise, it would be fair enough to declare it in 10, and the things will fall in place. Otherwise, if you don't report, there will be a mess in 2 years, not only in this year, even in the next year.
And more importantly, see, department will then, if you don't show it in table 9, in table 5 of 9C, when there will be difference, they will make you pay again. They'll ask you to show it in December liability how you have paid. Then you have to show your entire tax liability of December month, what you have paid, how much it constituted, how much extra you have paid. You have to justify that, see, my total liability was lesser, I have paid extra 30 and all that. So I agree with Vikram sir, it is for all practical purposes, it is better to declare this amount even though paid after the specified period in table 10 itself.
Any other views on this matter?
Right, I think so. Then we can move to next case study. PQR has made certain wrong disclosures in their monthly returns of 21-22. So, about this December. So, PQR has shown certain wrong disclosures in monthly returns of 21-22. B2B supplies of 10,000 wrongly reported as B2C and then amended in 23 monthly returns. SEZ supplies with payment of tax wrongly reported in taxable outward supplies in 3B, and ITC of 20,000 not claimed at all in 3B. So what will be the impact of above transactions in GSTR-9 and 9C?
I think we'll have to deal with first two and the last one separately.
So we can deal with one at a time. Maybe we can first discuss the first one. B2B supplies wrongly reported as B2C and then amended in next year. So if you see the relevant table in GSTR-9, because table 4, B2B supplies are going 4B and B2C supplies going 4A.
Hello.
Yes.
I guess in the first transaction, there won't be any impact. I will correctly disclose the B2B under B2B and B2CS sale under the B2CS sale. And the amend, if the only option that we can do, we can show it in the amendments column if we want to show. But ideally, the better proposition would be to show B2B as B2B and B2, the normal B2CS sale as B2CS.
Any other view? I agree with that, Mr. Vasudev. While filing GSTR-9, your tax liability you have correctly paid 10, that is on 10,000 rupees. It's just that your presentation in your monthly returns was incorrect. But while filing GSTR-9, that should be corrected, and it should be shown in as B2B supplies only. Right, sir?
So to support this view, the whole idea of getting annual return is to rectify such kind of errors which would have been made in monthly returns. So again, if you disclose it wrongly in B2C,
yeah, the whole purpose will fail.
Of annual return.
Right.
So even if that correction is not made subsequently, and because that error remains, still I should correct it.
You should correct it. Right.
But in that case, the other person will not get the credit. That's the only drawback.
Yeah. If you don't correct it in your monthly returns, the impact of correcting it in 9 will have no impact for the other person. Now, second is SEZ supplies with payment of tax wrongly reported in taxable outward supplies in 3B. Like a normal taxable outward supplies. Same answer. Everyone agrees that you will correct it. If you not correct it in your GSTR-1, in your reporting of GSTR-1 and this thing, or in 3B, and if you want to claim refund, which I am assuming the person would want to, then that refund will get rejected on this ground. So correction is required in your monthly returns as well, but at the time of filing 9th, you definitely have to show it correctly. Next is a common question actually which comes from many times from clients that I forgot to claim certain ITC. Now at the time of filing GSTR-9, 9C I have realized. So can I claim it now? So yeah.
So in this subsequent year,
November.
Now assuming
you are until September.
Yeah, okay. So let us yeah. So suppose I am filing my GSTR-9 in October itself. That is before now the due date of 30th November. So while filing GSTR-9, can I claim that credit in GSTR-9?
Yeah, you can claim. No, I would believe you cannot, because it will not hit your electronic credit ledger. You'll have to go through 3B route only, because then only it will hit your electronic credit.
Agree, fully agree. So I'll just repeat what Yash said. Basically, if you show it in GSTR-9, it has no relevance at all. Because it will not get reflected in your electronic credit ledger. GSTR-9 is merely a disclosure. Unless you claim it in your GSTR-3B, it will not go in your electronic credit ledger. So there is no point of showing it in GSTR-9. You have to claim it in your monthly GSTR-3B only, and then only you will get the benefit of it. So you cannot claim it in GSTR-9, that amount.
Okay, one you mentioned it should be September. So while preparing, working on the payment amount for the month of October, QRMP makes payment every month.
Right.
Correct? So for computing that, if they are using the self-assessment method and computing the tax, can we not consider that ITC if we are not considered in 3B? Can we not considered in the October month working?
In the October month working, yes, in your self-assessment you should consider.
So that will be allowed.
Yeah, because now because of the extended time limit, yeah, you can.
If we miss that September 3B is gone and we did not claim ITC.
Still in the October month you can claim it in your.
With the credit ledger in.
If you are not going on that on the ad hoc calculation, you are going on the actual calculation.
Self-assessment.
Yes.
We can consider.
In the return, and that return will not happen. It will be in the next quarter only. So what will happen is, while making the payment, you are just making the payment in 3. Correct, right? So the claim will be registered at that point of time only. When you are making QRM. So even if you are doing it on actuals, I mean, and not on the assumption thing, you are just doing it for yourself, not in the system. You're paying the net tax. So the benefit may not be available because when you are in QRMP, what will happen is the return will be filed.
Yeah,
The dates will not match.
Yeah. So, sir,
I mean, it's a possible. I mean, it's 100 times better than leaving the claim.
Right.
Try and nick out the claim, but yes, there is going to be a difficulty because for the QRMP they are going to consider September only, because when they came out with this, they were very clear that although the date is there, returns it has to be there. So that may be an issue. Otherwise, I think yes, as an option, this is the best option that you can claim it at the point of time. Yes.
So, just with due respect to a bit differences, the press release says that in October, whatever you can claim till October, and because your returns will be filed till 30th November.
Yes.
That is what the press release says.
Yeah.
But we have internally also deliberated, and of course it's an aggressive view, but a view can also be taken that I can claim it in my November return as well, which I may file till 20th December. Because the claim is eligible to me up to 30th November. Whatever I am taking in my return till 30th November, I am merely disclosing it and filing it till 20th December. See, GSTR-9 and 3B are merely disclosures of what I have already done. Okay, I'm not actually taking the credit on 20th December or on 18th December when I'm filing the 3B. So one aggressive view can be taken is that till 30th November I'm entitled to this credit, and I'm claiming it as that, and I'm only reflecting it in by 20th December or 11th December, whatever in my returns. The claim has already been taken. And if you see under standard credit rules also, under Rule 47 there was time limit of claiming the credit within so and so time period. At that point of time also there are few judgments which says that if you have taken the credit in your books, then also that credit is allowed. Okay, now that also at that point of time when anyone was taking, even I would have advised, no, you have to claim it in return only. Without that, how can you claim that you have taken that credit? But someone took that benefit, went ahead, litigated it, and then tribunal in Jagdamba Polymers Limited, there is one tribunal judgment, one more I cannot recall exactly. So of course, as sir said, instead of leaving the credit, if you have really lost it, you don't take it as a golden rule. I will take it in October only. Okay, you take it till September. That's the best view. You follow the press release. But if you have missed it, an attempt can be made to claim it in October as well. If you are a quarterly return filer. Right.
I mean, I agree with you on that one, but there is a difference as far as standard rate, because the manner in which the standard rate was there, the courts had a very much pretty liberal, and there was no aggressiveness
and even there was no such TB reflection and all that.
So the best example is that when you already pay the tax, recently we have that judgment where we say for the purpose of interest, we had deposited the tax, but the tax got adjusted later when we paid that payment. So even for that matter, when the amount is lying with you, if the courts can take this view, this seems to be a very distant view to,
that comes as a surprise actually, because we have been advising if you have deposited, then
that is sufficient. Yeah, and previously I think there is one more court's decision which says that it should be considered and it is allowed, you need not pay interest.
Right.
But this was absolutely so. This would be a far too aggressive view, as you rightly said. But yes, it is certainly a better way to go about it and fight it out than leaving the claim all along.
And in one more to add to this, Bharti Airtel, that if you remember, Delhi High Court judgment, they claimed that refund stating 900 something crores, that got reversed in Supreme Court. But there is one very good observation of Supreme Court in that. Supreme Court says, because the whole point they were making was that, see, your system was not ready, today was not ready, your matching system was not ready, so I did not know how much credit I will get, and therefore I paid everything through cash, and then now I want to claim it as refund. So Supreme Court has given a very good observation. It's a detailed observation in one of the paras, where they have said that, see, return is just a reflection. You have to still follow your books only. You could have very well claimed it in your books. You could have computed your tax liability and you could have paid it. Even if matching concept was not there, your recording, your books is the primary document on the basis of which you compute your tax liability and claim the credit. So that can also come to help.
So that coming to helps complication would come into form. Gujarat High Court decision of AAP and company being reversed in Supreme Court following Bharti Airtel.
Correct.
Whereby they disregarded the fundamental that 3D was just add information and 3 was supposed to come in place. So one suggestion that I would put for if you are claiming this in your self computation or thing that sort, claim it but don't use it. There is no interest now under Section 50, subsection 3. So don't use it for 5 years if you can. Keep it pending with you. After 5 years, there is a statute of limitation that comes into play, and then after use it if you want to.
Sir, the credit note, debit note. Now the table 4, credit note, debit note, and amendments or to the supply are mandatory to report. Correct? Till last year it was optional. So I have a credit note which I had shown in say April 21 return for like 1,10,000. Thereafter, it was I realized that it was actually 1,10,000. I mistakenly it was reported, and just the subsequent month itself it was corrected. So while reporting in 4I to L, should I use the amendment or should I correctly report it in credit note column for as 1 lakh only?
And I think in positive time we'll take it offline. Both the session.
We'll take it offline if you don't mind, because this needs to be noted down and then Okay.
So this again case 3. So this case India. This 20,009C will be unreconciled ITC in 9C.
In 9C, yes. Because as per books, your credit will show higher, but as per your GSTR-9, the credit amount will show lower. So it will show that you have claimed lesser ITC. It will be an unreconciled item, but it will be department will not question it. They are happy.
So sir, that's still question. They don't see it's a positive difference, negative difference.
Recently, I had a session in department, in CGST department on 9C, and to my surprise, it was all new to them. All the tables, everything. So you are right. They just see the difference.
So having explained the unreconciled difference in the turnovers, not the tax amount, there's no issue with the tax. Having explained very clearly, at one initially one of the auditors of 9C, what they have done, they have put in the pan-India turnover in table 5 and put the other states turnover as an unreconciled difference, plus explanation that this turnover is two different states. With that explanation being there, still is not accepting any
but that is true for all the states. In fact, whatever the difference of turnover of other states is there, each state, I have a matter where each state is raising the same query and we are giving the same reply all along. Now it is very clearly explained. But still they are asking, I mean, you can't, it's their right to ask you questions. So they are asking, it is like that. So,
okay. Yeah. Case study 4. The following are details of ITC of Mrs. RST for the year 1819. ITC appearing in 2A is 60,000 rupees. ITC availed in 3D is 70,000 rupees. Out of which 15,000 is of previous year, which is availed in current year. ITC of current year 10,000 rupees I have availed in next year. Okay. So basically in this year I have availed ITC of 55 plus 10, 65 of this year and 10 and 15,000 for previous year. But in 2A it is appearing only 60,000 rupees. Now because of this, although I have claimed 65,000 rupees for current year, 15,000 pertaining to previous year, total ITC which I have claimed is 80,000. And the amount appearing in 2A is 60,000. So table 8, where these figures appear in GSTR-9, this is how it will look. ITC as per 2A is 60, and then the total 80,000, difference minus 20,000. Okay. Now the first issue is Mrs. RST has received system generated SCM. What I mean by system generated SCM is just to clarify. In many locations, what is happening is on the basis of GSTR-9, 9C or on the basis of GSTR-1, 3B, show cause notices are being issued, which are generated by the system itself. There is no intervention, human intervention involved. And these show cause notices are issued to the assessee to explain and pay the tax, basically. So a system generated show cause is issued disallowing the ITC of 20,000 as the amount is appearing in table 8D. Now, whether the department's stand is correct and how to contest this. I'm sure this is very common show cause notice which all assessees across all industries have received. So, what should be our stand in such case?
Archit, shouldn't this 15,000 of previous year which I have claimed in available current year, shouldn't it be reduced in my 8C also? I think the explanation to table 8C, which is a part of instructions, considers that.
One second.
No. Previous year's figures are not to be reported. In fact, they have clarified that.
Sir, may I?
Yes. I 8C.
Sir,
ITC but awaiting next year. वो तो next year future वाला मिलेगा. इस साल का अगले साल का मिलेगा. Yeah.
Hello. Hello.
Yes, we can hear you.
Yes, Kunal, please go ahead.
Yeah, sir, I agree with him. I think the table number 8B, which comes from 6B, it should include only 55,000 because instruction 2A also states that previous year's figure should not be included here. So in 6B, we'll put 55,000 only. And this table number 8B will automatically take from 6B. So 55 plus 10, 65, and 5,000 only difference will be there. That will be due to 2A.
No, but so the auto population will come of the entire figure.
Yeah, auto
so
population.
The difference will be there of 20,000. So that's why we are saying when the auto population is of a higher figure, you are putting a lower figure. So the difference is coming off 20,000.
No.
See, auto population happens from TV, no.
No. Yes, sir, auto population. Sir, sorry, but auto population will come from 6 in. Will come in 6A. And this table number 8B figure will be coming from 6B, which we will insert. This 6B we have to insert. So 6B, the prime question here is whether we have to insert the 6B figure that should be what we have claimed in 3B of both the years of previous year and current year, or only for current year. So you can refer instruction number 2A of GSTR-9. They have stated that table number 4, 5, 6, 7. This figure should include only of current year and not for preceding years. So it will come from 55. 55 will be there in 6B.
But then there will be difference in 6J.
So then there will be a difference in 6B then.
6B, yes, 6J. There will be a difference in 6J. 6J, that will be.
There will be a difference in 6J which you will have to explain, or there will be a difference in it.
But sir, that 6J difference will be. Perfect. But 6J difference will be a clear-cut difference of previous year's ITC claimed in current year that can be reconciled from table number 8C and 10 of previous year 9.
Reconciliation can be done. That is, everybody agrees on that.
And it will
it's a matter of interpretation only.
No, it will, sir. It will also go with the instruction flow of GSTR-9.
It is better to show it in 6J, the difference in 6J,
Yes.
than to show it in 8.
8D. Perfect.
That is what
Perfect. Yes, sir.
Yes. Yes. Right. That can be a way of showing it. Although I personally show whatever credit is reflected in 6A auto-populated figure. The breakup of that is what we usually show in 6B to 6H. That is what we usually show, and that is basically the idea is whatever credit I have availed, I have to give a breakup of that. How much is inward supply of inputs? How much is inward supply of capital goods? How much is RCM inward supplies? So, but I agree, Kunal, the instructions which have been amended last year actually,
Yes,
they say you don't include last year's figure.
Perfect.
Right, I agree. That is how it says. So then, as Vikram sir has highlighted, then the difference will come 15,000 over there and 5,000 difference will come in table 8.
Yes. Very true.
Any other views? So it's just a matter of showing the bifurcation of difference from 6J and 8.
And sir, I think I recollect the old instruction that table 8 is just a statistical purpose and it is not to be used for any other purpose. That was the, I think, original some press release or something was there.
That was there originally, but now everybody is using table 8 only to send you notices.
And second part, 8A is for the 2A is for the year. So naturally, something that follows has to be for the year only. 8A is for the year. 2A, 8A is for the year. So 8B, 8C has to follow the same law.
So still, but 55,000, if one way is looking at it is 70,000 will be reflected in 6B. Other is, you will show 55, fine. 55 plus 10. Still there will be 65,000 as against 60,000 appearing in 2A.
Because 2A is normally for the year. 2A is for the year. It takes only the invoices of the year only.
No, I agree. That is what I am saying. In your table 8D, it will show 60,000 in 8A. 8B will show 55 plus 8C will show 10,000. Still there will be a difference of 5,000. If I remove 15,000 for on the ground that it is not for this year, still I will be showing 55 plus 10, 65,000. So the issue is basically how to tackle these so-called notices.
Is it really not for this year? When I've claimed it in this year itself? I think that's the one important point that we just need to regulate, because when I'm claiming it in this year, let's say for the sake of argument, there was an amendment in section 17. Something, it was allowed at that point of time, let's say 21-22, and 17.5 got amended even more. There are more restrictions. And today, while you're claiming it in 3, it's coming to play. So it's a claim of this year or this year.
So, Sumit, as I said in the beginning itself, I would personally show that 6 in amount 70,000, that breakup only in table 6. Yes. I will not do it. Yes, it's due. Yes. I will not show 55,000. Yes. Although the instructions say, can be interpreted as you said, it is the claim of this, it is part of this year also. Let's park that issue aside for time being, that how you will declare, because in either case you will have to explain that 15,000 difference either over there or over here, 20,000 entirely over here, or you show or you explain 15 over there, 5 over here. So that will always remain. Okay, so for such issues, some relevant provisions which we can discuss. See, this issue we are discussing about, this case study is for 1819. Okay.
So one doubt,
now,
sir.
Yeah.
So can this previous year's ITC claimed in current year be reported in table 6M?
Sorry.
So the instruction says few illustration lists like ITC1, ITC2, ITC claimed in ITC1 and ITC2. But is that illustrative and can we use it to report this previous year's ITC?
No, the 6M is not for this purpose. It is anything which is not covering above. If you see the explanation also, I remember there, yeah, it says details of ITC availed through form ITC01, ITC02.
Is it
Such
illustrative?
cases where there is a transfer of. Sorry?
Is it illustrative or exhaustive, sir? Is the examples given illustrative or is it exhaustive to only ITC 1 and 2?
Illustrative, but from that illustration we get to know what is the idea.
Yes.
Basically, any last year's credit does not get covered by this, does not fall under the same genre of this illustration. Right, sir?
So it is specifically to cover special circumstances cases, and that's why this column is over here.
Previous year, which is not claimed in previous year, will not appear in total of last year as well as current year also. It will be only difference in 6J.
Yes.
That is one view. That is one view. That is one view.
We firstly don't prescribe to that.
Right.
But sir, in table 11 and 12, we are showing the earlier figure of ITC that is claimed forward in the next year. So you can derive that thing.
Yeah, so that is how you do the reconciliation, no?
Correct.
Yeah, yeah. So that
So you will show
better can be explained.
Yes, sir.
So I think there is a
we
slight difference here because in case of outward turnover, whatever difference we are adjusting in 10 or 11 is adjusted there. But in case of ITC, that is not adjusted there. So that issue is there.
That's right. Absolutely. That's right.
That is only a reporting requirement so that you can correlate.
See, the purpose of tables 6 and 7 is not basically to match it with what you are showing in your books. It is to match it what you have done during the year, what you have claimed. See, that is why table 6 first starts with 6A auto-populated figure of what you have shown in 3B. And the idea is to give a breakup of that, how much pertains to normal supplies, how much pertains to RCM supplies and all that. And that is why, but as we have already discussed that either ways, anyways, you show it in table 6B to H or not. If you don't show it over there, a difference of 15,000 will come over there. If you show it over there, then the difference of 20,000 will come in 8B. Irrespective, there will be a difference in 8B in this example. Okay, and keeping that aside, I'm sure there are thousands of more reasons why a difference will come in 8B. Okay, 2A will never match with 3B is what I feel, right?
Archit, can I put one point over here? So basically, what probable solution which I feel over here is that though it might not fit 100% as per the instructions which are given in as a part of 9C. Ideally, what they have done is they should have added one more row over here, maybe 8C1, saying that ITC pertaining to previous year claimed in current year.
Right.
Correct. That should have been one more row over here, so that you would have reduced 15,000 of previous year ITC which you have claimed in current year. But they have not inserted that row over here.
See, frankly, I'll tell you.
Ideally, the best solution which I feel is that this 10,000 which you have written over here in 8C, instead of that you should write minus 5,000, which says that 15,000 of previous year you are reducing and 10,000 of next year you are adding. So net difference comes to minus 10,000,
right?
Minus 5,000, and then your difference of 20,000 goes away.
So yes, your point is fairly taken.
And maybe for this minus 5,000 which you are doing over here for 8C, you can have a backup working. Saying that this minus 5,000 pertains is on account of 15,000 of previous year and 10,000 of next year, which were.
No, still there is. I'm saying after that 5,000 is basically someone who has not declared. My vendor who has not declared. Ultimately,
my 2A doesn't show some ITC and
Right.
that claim and I basically notice.
That's why I'm reducing over there.
No, even after you reduce 15,000, 5,000 will still remain.
It is not in my.
You forget all these things. You simply see ITC as per 2 is 100 rupees, ITC as per 3 is 120. Straightforward, 20 rupees, one vendor has not shown an invoice. That's
So you are solving this problem for at least 15,000.
Correct.
That can solve that. The problem gets reduced from 20 to 5.
Agreed.
Show cause notice received for 20, but at the time of adjudication, you are getting a benefit of 15,000 once you show the previous year's return.
That much benefit you will get.
Balance and that is appearing in last year's 2A. Once you show that, yes, it is appearing, they are fine with it.
But your notice will start with 5,000. If
Yeah.
you go by this solution, your notice will start with 5,000 instead of 20,000.
But if you are saying that row is added over here.
No, otherwise also maybe we can
do an internal working and put a net amount. That is what is putting.
How will you show a net amount over here?
So that is what I'm
Autoflow.
That is what I'm saying.
8C.
8C. I'm saying that you do this minus 50.
Acha, you are saying, oh, okay, 8C may you adjust it and you show it.
So I'm saying that 8C includes
8C, which is the manual thing, you adjust that internally yourself.
And it accepts negative.
Yeah. Okay. Okay, so Yash's suggestion is that in 8C you show minus 5,000.
Yeah.
Minus 5,000.
Right.
Net of the opening and the closing.
Correct. Okay, that can also be a
The application of it will be when you show it minus, it is shown as a payable.
It doesn't get exactly come as payable, sir. और payable बोल सकते payable मेरा net effect है वो हो चुका है.
See, 10,000 आपने इधर जो बताया आपने लिया already you have taken, right?
Sir, their instructions to annual return also says that your ITC is neither to be billed in GSTR-9 nor to be reversed in 9. रिवर्सल भी आपको करना है पेबल भी है तो भी आपको नॉर्मल डीआरसी 3B में ही होगा वो भी
तो होगा ही है.
तो माइनस भी मैंने दिखाया है आई कैन गिव एन एक्सप्लेनेशन ये मेरा 10,000 करंट ईयर का है 15,000 पिछले साल का ओपनिंग बैलेंस था सिंस द गवर्नमेंट हैज नॉट गिवन द एरिया टू डिस्क्लोज आई हैव यूज्ड माय लिबर्टी टू पुट दिस कोड in addition to that for 18-19 there was an option to upload some PDF files so you use that and put it forth
17, 18, 18, 19 PDF option was there.
So basically is that there is always going to be a reconciliation. Anybody's presentation you take, I mean the method which Yash is saying or which we have followed in the question or the one suggested by Kunal, in all these cases there is any which way is going to be a SEN and you will have to provide a reconciliation.
And also
So the issue is that okay, they have not provided, it's the question of how to present it.
No, that is not the question. The question is how to tackle
the notices which come whenever these are coming regular. Okay, so one way is if you are showing that in the table 12 in the previous year, that can be auto correlated to say okay, I have already shown that I have claimed this credit of in the table 12 of the 9 of the previous period, and therefore it is pertaining to that, so that out of 20,000, 15,000 already gets reconciled. So that both system figures are available to them. So the question will then only remain about 5,000, which even Sumit says that end of the day you will have to explain that in the SEN that this 5,000 is pertaining to the difference of not shown. So whether payable or not.
That notice has come from State Department. They have given a way out to you. If it is from Central, you find your own way out.
Right. So I'll quickly touch upon that. Basically, section 16(2)(8), which refers to GSTR-2B, has been inserted from January 2022. So one of the arguments is that this has come in the Act only from Jan 22, and this for the period 18-19 there was no such restriction in the Act. Okay. Of course, department takes the view that the other condition is that the tax on that invoice has been paid or not. Now that I think Madras High Court in D.Y. Bethel has covered that first you go and check with the vendor why he has not paid the tax. Is he absconding? Is he not traceable? Is he not able to pay the tax? Then you go and ask the assessee, the recipient to pay the tax. You simply cannot go and ask the assessee, you pay the tax, because on the other hand you will always going to recover it from him along with interest. And over here you are denying it to me also. So of course Rule 36(4) was there, but Rule 36(4) is beyond the provisions of the Act, because Rule 36(4) in October 19 brought up this condition that you can claim only 20% of what is appearing in 2A. But that did not have any backing of Act. Okay, so that is there.
The biggest irony is that even after 20% is there, and I still, if I have a difference of 10%, they're still issuing notice.
Yes. They are not checking that.
Their own 36 crores allowing difference between 20%, not considering that. Which no difference enough. वो हमने सिर्फ add entry measure आपको दिया था 20% for the timing. Forever नहीं है 20%.
Forever नहीं. That is what they say.
Yeah, and then they are also of the view that once that time limit of previous year was September, now October or November.
If that is gone.
If that is gone, by that time you could continue taking 20%. Once that date is there, whatever is the difference,
then you have to pay.
If that difference is there at the point of time when you are allowed, that time limit ends. Once the time limit ends, whatever is payable is payable. That is the that is their fundament. So
that I think will speed up.
Yeah.
So one more thing point over here, since you pointed out January 22, whether it will apply from all ITCs or invoices uploaded after January 22, or for previous claim, the previous law shall apply. So what we are saying, the claim, this is amended from January 22. Whatever is seen, that only you can claim.
Right.
Okay. So till December, let's say till December, can we take the old law in place and say that no, you need to allow only from January? Agar nahi dikhta hai, so the question of payment comes into the picture. But there also, what happens is you are saying whatever is seen. Now it is possible that till next October he may amend. So till that point of time, and now you're saying that you should claim the full credit and then reverse it.
Right.
So the question is that every time when I'm showing it full and reversing it, so at the end of October, I may still take that credit, okay, although not in consonance with this, and then say that whenever he pays, I should automatically get the credit.
Right.
And if he doesn't pay, then I'll pay up with interest because that's a risk which I'm running.
Agreed. Right. So that is there. After this Jan 22 now, in the new return format, you are claiming everything first and then you are reversing it. So anyways, you have already claimed that amount and reversed. So you will have to challenge that department stand that after that due date, if they have reported it, then I am not entitled to. The law does not have that restriction. The law simply says that tax on that invoice should be paid. Once I am able to prove that the other person has paid the tax. It has happened with me while one discussion with SGST department. I was able to prove that the SSE had shown the tax as B2C. So their argument was if the SSE has shown as B2C, you will still not be entitled to credit. I said the condition is fulfilled. He has paid the tax. They are like, no, unless and until it shows in your GSTR-2A, you are not entitled to that credit. So any such condition is not there under section 16.2. Now from 22, yes, 2B is the condition which has been incorporated in that. And
so can we have up to December 21, old provisions should apply?
Of course, old provisions will apply, and old provisions have, there is no restriction. You claim it as per your books. You don't have to reverse any credit. And I think Sumit had pointed out that internal circular of Maharashtra VAT, which is there. Yeah, you get CA certificate if it is more than 2.5 lakhs and less than 2.5 lakhs, you get self-certification from that person. And some gentleman was referring to this press release. I just read the highlighted portion. Taxpayers need not be concerned about the values reflected in this table. This is merely an information that the government needs for settlement purpose. Figures in 8A of Form GSTR-9 are auto-populated only for those GSTR-1 which were furnished by the corresponding suppliers by due date. Thus, ITC on supplies during financial year 17-18, if reported beyond the said date by corresponding supplier, will not get auto-populated in table 8A. So over here they are highlighting that table 8D, you don't worry about it. It is just for statistical purpose. However, this is the most draconian table on the basis of which show cause notices are being issued. Yeah. And these are some of the possible reasons which I have highlighted for mismatch. Basically, B2B supply is shown as B2C, which I just now mentioned. Then wrong GSTN has been uploaded by the supplier. I have a normal GSTN. I also have an ISD GSTN. So there could be a mistake done by the vendor. then a wrong place of supply has been mentioned. So if a wrong place of supply is mentioned, then it will not get auto-populated in my state. In my state GSTR-2A. As sir pointed out, GSTR-1 uploaded after due date, so they don't take it as this thing. They do not cover it under auto-populated. GSTR-2A being dynamic is updated constantly.
Yeah.
Now I have decided to file my GSTR-9 suppose on 1st of December. Now on that day, table 8D may have a difference of say 50 lakh rupees. But if I would have waited till 31st December, that difference would have come down because I would have pushed my vendors, they would have filed more returns. So that being dynamic, the difference will always be there. When you go for adjudication, if you have received the show cause, you please download GSTR-2A of that date and you file it accordingly. In one of the cases, the adjudicating authority has dropped the demand to the extent of updated GSTR-2A. So they accepted that yes, GSTR-2 is updated today. So now your difference is lower. To that extent, the demand has been dropped. Of course, it is a one case which I've come across. Otherwise, no one accepts that. But that will be a strong case at higher levels, at least tribunal level. Then there could be a difference where supplier has uploaded as IGST, whereas the invoice was CGST, SGST, or I have claimed it as CGST, SGST. Then there could be date mismatch, like 1st April 22, and I considered it as 4th Jan 22. 1/4/22 to 4/1/22, my system was MMDD and DDMM. So because of that, a lot of differences arise. The year changes and your 2A and 3B will show a mismatch. Okay. A registered supplier of RCM, okay, will show the invoice in GSTR-1. He will tick that invoice as supplies under RCM. So that will come in my 2A. Although that will show a higher credit actually to me in table 2A and table 8A. So that could also be one of the possible reasons for mismatch. All right. We'll move a bit quickly. Second question is, in the above example, suppose the e-way bill inward data of the company shows only rupees 20,000 GST. Again, the department has issued system-generated SCM denying ITC of 40,000. So because you have claimed the credit of 60,000 and whatever is the amount, basically your inward e-way bill is showing only 20,000, that is a lower amount, and because of that system generated show cause. Now this is not hypothetical because just last week one of our clients has received exactly this show cause notice that their inward e-way bill supplies are showing lesser value and the ITC which they have claimed is showing a higher value, and therefore the differential amount they have issued a show cause notice disallowing the same.
So we have any legal backing for this difference?
If it is, see, your ITC will include the ITC of both goods and services.
Exactly.
If there is only going to be of goods.
Exactly.
So there is always going to be a mismatch of data in tables and ITC which you are claiming.
Right. So I have highlighted 3 possible reasons which came to my mind. One is that it is not applicable on services, so that difference will be a huge difference which will always be there. Then there is threshold limit below which e-way bill is not mandatory. So if the purchases are below that limit, then e-way bills are not prepared. And third is non-compliance by the supplier. E-way bill was mandatory, he has not prepared it. Whether I am responsible for that? If my records show, I can justify that I have actually received the goods. I have received the invoice. I have made payment through banking channels. There is no fraud or fake invoicing involved. Just because the e-way bill is not prepared by the supplier, can the credit be denied to me?
Existing does not never says the condition of a e-way bill.
Exactly. Exactly.
Fine condition of ITC is always in essence.
Right.
So I would
Yes,
make
sir.
a little bit difference over here. There are 2 things over here. One, they can certainly ask the mismatch. They are within their powers to do that.
Right.
Okay. Secondly, yes, whatever differences he has said is absolutely correct. Apart from there, many a times what happens, billing is done on A, dispatches is done on B. Okay, so it is not necessary that the dispatch or my inward will mention there would be a valid bill, as he said, and on that bill, it would be written that e-way bill, by that e-way bill, it has come to me because it is billed to somebody else. And that other person will bill me.
Right, sir.
Referring that old e-way bill.
Right.
Okay.
So
bill to ship to model also can be there.
Correct.
Okay. And another thing, now only there will be some difficulty as far as to say that he has not complied with e-way provisions. Because e-way provision says that either the supplier or the recipient can make a e-way bill. Yes. So we can't take that stand that it was his responsibility. He has not fulfilled it, but you are also registered. If he has not fulfilled it, you have. I'm not saying your claim will be denied.
So, but on this one point is because the rule 138 says the person who is causing movement of goods. So
shall be responsible to generate.
But they are saying either the supplier or the recipient can also make. So you are saying that not that your claim will be denied.
Right, sir.
It is not a condition as per section 16, so they cannot deny your claim.
They can allege fake invoices.
Yes, and it is only in respect of fake invoices, it will be an added proof.
Correct, sir.
To say that you correlate.
Correct, sir.
This particular invoice. Otherwise, what you are saying is absolutely correct. That cannot be a basis. But these these notices come only where probably you're dealing only in goods, or the difference in the ITC claim and that of the e-way bill is too huge to fathom for somebody to say all are below 50,000 or something. Absolutely.
If you are a manufacturer or then ideally 80-90% of your supplies will have e-way bill.
Yeah,
inward supplies.
Yeah. So, but I would believe that bill to ship to issue will not have difference over here because in e-way bill to ship to both the details are captured.
No,
and GSTR of billing location is also
certain times only your name and address is there. You have additional places.
You have to mention GSTR of the billing party as well.
Correct. So 99% does not happen.
So e-way bill is not prepared for the diamonds.
Sorry,
e-way bills are not prepared for the diamonds.
So they are exempted. Yeah. Diamond industry is exempted. So that is a different issue. So it will not be issued to them.
Yeah.
See, certain times what they do in e-way bill, initially when e-way bills were made, it was not necessary that you put in the GSTR number.
Yeah,
the GSTR number is there.
Has been introduced much later.
तो GSTR number नहीं होने पे भी वो address डालो तो भी हो जाता है. So that some cases can be of that. And see, what happens is ultimately for dispatch, you can write somebody else's address. Okay, and that address may not be the official address of billing address, and that may not be the address which is there registered by that person. That can also be another issue. So, of course, this notice you have to answer, but they cannot deny your claim.
Yeah, sir, of course. But yes, this is basically a red flag because such notice has just come, so it has come as a shocker to us. Now we can expect more such notices. Okay, so next case study. A company MNO has inadvertently not disclosed taxable outward supply of 1 crore in 18-19 monthly returns on which tax of 18 lakhs is payable. Now at the time of filing annual return, the company wants to pay the same. The company has sufficient balance in ITC ledger to pay the same, but while filing the RRC 03, the system is asking the company to pay only through electronic cash ledger. The company wants to know whether the restriction is correct and how to deal with this. Now there is one instruction which is reproduced below. Towards the end of the return, taxpayer shall be given an option to pay an additional liability declared in this form through DRC 03. Taxpayer shall select annual return in the drop-down provided in DRC 03. It may be noted that such liability can be paid through electronic cash ledger only. So whether this restriction is correct, whether the instructions, and if so, how to deal with it?
So unless it is an additional liability on account of RCM, I would believe that there is no restriction to. There is no restriction. Merely because of this instruction, there is no restriction in the law to say that you cannot use electronic credit ledger. So unless it is an RCM additional liability, you can use your credit cards.
Right.
So practically, how to deal with it?
So see, if you see section 49, payment of taxes, section 49(4), in my slide also it's there on screen. The amount available in electronic credit ledger may be used for making any payment towards output tax under this Act or under IGST Act in such manner and subject to such conditions and restrictions within such time period as may be prescribed. So in Act there is no restriction. Now, no, not even in rule. Now, what was happening? If you are aware, while filing appeals, also this issue was coming of pre-deposit. Okay. When you have to file appeal before commissioner appeal, you have to file JC appeals. You have to pay 10% pre-deposit. So that assessees were paying through electronic credit ledger. In that also, many times the appeals were being disallowed on the ground, basically rejected an issue on the ground that you have not paid. Yeah, you have not complied with the pre-deposit requirement. So in the case of Oasis Reality, Bombay High Court has held that amount available in ITC ledger can be used for making pre-deposit payment. So there also they have accepted. So no, that Jyoti Laboratories you are saying that talks about service earlier law. For GST law only this judgment is there. This is so what I wanted to highlight is there is no restriction in law, but yes, there is restriction in form which is beyond law. We all know portal and form and everything works beyond law. So having said that, while paying the tax through DRC 03, if you select the option of annual return, then it will not give you an option to pay through ITC ledger. Yes. So you don't select that option, you better select voluntary option, then it will give you both the options. So to come out of this situation, we should not select annual return at that point of time. Right? Right, sir? I take up one.
Now the next case study is JKL Limited has inadvertently paid CGST and SGST during the year 2021. While filing the annual return, it was found that the transaction is leviable to IGST. Now the company wants to know how to give the effect of the same in GSTR-9 and 9C. Also, whether tax needs to be paid again. If yes, whether interest is payable for the delay, and what about refund of the tax already paid. Yes.
So the first question will be whether I should report in my GSTR-9C as a correct IGST transaction or should I continue with CNS? I think that will be the first thing. Thereafter, the payment of taxes and the refund will flow. So, in order to get my refund, I would be of the view that I should be showing this as an IGST transaction if I've already got to know. Irrespective of the fact that this has been reported CNS in my 3B and 1. So let me report this as IGST. The end of the day, table 9 may contain some payables and all these things which I anyhow under section 77 have to pay and claim a refund without any interest effect under the section 77 and all those things. But let me put this for declare this as an IGST transaction and pay time claim a refund as well as provisions that have been put forth.
So there was a case law, sir. You can the court has got a power to order the adjustment of IGST.
Kerala High Court. That has been reversed by division bench.
Yes, that has been reversed by division. And it was a very specific to facts matters where they had paid some tax on eBay bill.
Right.
So that is not applicable. The section is also very clear. So we cannot. We can't say that they should adjust it. They are not doing it. So you will have to claim a refund and pay the tax first and then claim a refund. And if you want to claim a refund, as he said, you will have to show it because that should stand out as a difference. Then only you can substantiate the fact that this is the tax which I have paid. Again, they have clarified to say there's a circular, I think, 142. Yeah. So there they have clarified where they have said that the refund period will be from the date when you are paying that additional tax and not from the original date. Although you are taking refund of CNS, you have paid IGST now. Okay, so from the date when you paid IGST, your 2-year period will begin from that date. So you still have 2 years to claim your date. So it will not be said that ye to date sa ho gaya and somehow if you are filing it late, you are not entitled to refund. So that situation will not arise. So that they have clearly clarified on that issue. Should we move ahead? Any other? Yeah, Archit, do you have any views on this?
Yeah. So as sir, we have highlighted that section 77 is very clear. So you again have to pay the tax, the correct tax, and you claim refund of the old tax. In fact, Sadili as proprietor judgment has been reversed by division bench. Then there is Jharkhand High Court judgment of Sri Nanak Ferro Alloys, which also says that you pay the correct tax and you claim refund of the incorrect tax which you have paid. And so this circular which sir highlighted says that from the date when you have paid the correct tax, from that the time limit will apply. There is one FAQ actually, which is dated 15/12/2018. In that, so they are saying that the time limit will not apply at all. What is
The law will prevail, the circular will not prevail.
So this is an FAQ.
So no backing up.
Yeah,
Not even circular.
yeah, not even. So, but having said that, of course, you will be able to get the refund. Yeah, so that will not be a problem. I think we can move to the next case study. Yeah. The people are not participating, and will encourage in this one.
So what will happen if already the person has taken the credit for that? So he in the
So this is the outward. We are not talking about credit. This is different. The question is pertaining to output liability.
output liability.
It is not pertaining
Yeah,
to
output
ITC.
liability.
What you are saying is about ITC. That is on a different footing altogether.
So suppose I'll say I have shown a transaction as CGST, SGST, assuming it to be an intrastate supply. And so my invoice will also show CGST, SGST. The recipient will also take the credit as CGST, SGST. Now it turns out to be that the transaction was IGST. It's a very valid question. The department can go and catch hold the recipient and say you have taken incorrect credit. But then I'll have to say that I have taken the credit on the basis of classification done by the supplier. And on that basis, I have claimed the credit, and the invoice also shows CGST, SGST. But that will have to be litigated. Definitely litigated. Right, sir?
Absolutely.
I think this point has already been taken in the previous workshops, sir, on GST refunds. This was one of the very specific issues that has already been deliberated, and all the participants who have taken benefit of all the speakers over there at that time, very specifically. Very clear view of the house at that point of time. Also, the input tax eligibility of the other person should not be affected.
Correct.
It is, as you rightly said, it is based on a determination made by the supplier.
That's right.
And post facto, you cannot deny the input tax claims just because you are putting it.
I'm not responsible for the classification done by the supplier. Okay. Next, A Limited is having following inward supplies which are liable to RCM. Legal services received from advocate 5 lakh. GTA services received 2 lakhs. Sponsorship services received 1 lakh. Okay, the company has recorded all the above expenses in P&L. The vendors providing such services may be registered or unregistered. See, I'll tell you why. Legal, if a lawyer is providing service to an individual, suppose he's a corporate lawyer as well as he's managing divorce cases. So he's providing services to an individual also. So in such cases, he'll be registered, he'll pay output liability under forward charge. Okay, same way GT has an option to pay under RCM and under forward charge both. So a sponsorship service provider, if the service provider is providing other services also, he may be registered under advertisement services, and sponsorship services go hand in hand. So a vendor may be registered for advertising services and he's providing sponsorship services also. So all these are registered persons, some may be registered, some may be unregistered. But the company has not recorded this detail. The company issues self-invoices and pay the tax under RCM, rightly so. Now the issue is table 6C and 6D. If you see table 6C and 6D of GSTR-9, in 6C you have to show inward supplies received from unregistered persons liable to RCM, and 6D says inward supplies received from registered persons liable to RCM. Okay. One more important thing in this is, earlier the law allowed me to show all the details in 6D. Now if you see the instructions, the last para, for financial year 17-18, 18-19, 19-20 and 20-21, the registered person shall have an option either to report table 6C and 6D separately or report the consolidated details of 6C and 6D in table 6D only. This has not been continued for 21-22. So that exemption was there till last year, that you can consolidate and show the figure in 6D. Now in current year, you have to show separately 6C and 6D. And as a company, no one is recording कि ये मेरे को जो 25 लॉयर के बिल्स आए हैं इसमें से 10 लॉयर रजिस्टर रजिस्टर्ड थे, 15 लॉयर अनरजिस्टर्ड थे, ये स्पॉन्सरशिप वाला रजिस्टर्ड था या अनरजिस्टर्ड था. So how do we tackle this situation while filing GSTR-9? Because when the client will give you the data, it will give you the direct dump of his P&L in which legal expenses will be there. In fact, legal and professional will be jointly there in that. So how do you identify and report the figures in GSTR-9?
So basically, in your two-way,
we should encourage online participants.
Participants who would like to participate, please raise your hands.
If the person is registered, then it will be appearing in two-way because if he has to take transaction.
Right.
To that extent, you can claim, you can show it.
So here there will be two possibilities: whether you need to show as registered dealer only if it is appearing in your two-way, or you can still say that he is registered and I will show that as registered.
So apart from two-way, I could also take some help from I think clause 44 of the IT audit report that has come into CCD recently, which has put forth the supplies from registered persons and all those things. So during the working made by the income tax auditor at that point of time, if he has prepared some table, so we as official courtesy we could ask for the workings from the auditee or the auditor if something is available.
I don't know. But the stand which he may take may not be
So
the one which
has
is
the list. If he has put forth something in the list of registered persons.
So I will tell you the stand taken in. Wherever I have had a talk and dealt with the income tax people, they have taken as the RCM means we are paying. We are putting the steps of the thing. So the income tax says you are registered. So RCM is put in registered. Because you are the one who are paying taxes and you are fit into the shoes of as if you are the supplier and you are paying tax, so you are registered. So most of them have taken that stand and put that whole RCM figure in registered. And they have qualified also to say that all RCMs have been taken as registered dealer. Because you are paying tax, they are concerned with taxation.
Correct. Yes,
so when we are doing it for the purpose of GSTR-9 and C, we probably cannot take that stand.
Not the stand, but
I mean,
reference material to some extent. If someone has not taken that stand and prepared a listing of what are the invoices who are genuinely registered persons, someone who has taken that trouble, it could come to your aid. Similar to two-way, it's not 100%, but it gives you an indication.
Sorry, video on. Yeah, क्योंकि तुम लोग का predict नहीं है तेरा video off है on कर.
So what you are saying is correct, Sumin, that if they have prepared and done the bifurcation, because even in conveyance, like railways, if he has gone, there are railway tickets, then railways registered. Okay, so so it will all depend on going and bifurcating each and every expense head and then putting it up.
So there are a lot of transactions where actually the service providers or the suppliers are registered, but there is no provision for them to record our GST on the invoice. For simplicity, we had a snacks over here. Okay, the restaurant next door is giving us the snacks over here, and they won't have the system to record chamber GST number on over there. Since it's a supply registered person, how do I record all these things? The advocate may be registered, he may not have taken my GST number into play because ultimately there is no tax payable by him on that.
So I feel as far as possible, if the data is available or on the basis of someone who has picked that RCM supplies into it, that much I can show in 6C and rest in 6D. Otherwise, I can show entirely in 6D and continue with that. Department, I don't know whether after this amendment they will take up this issue also, but it will be a petty issue. There is no tax implication at all.
Yes.
It's just a reflection of how you are showing it.
They are, I think, more concerned about the tax payment. If you have paid the taxes, okay.
Correct.
And they are that to verify from table 31D of 3B, not even going through the GSTR-9 on that test.
Right. Next is an interesting one and also a practical case study which has come to us. X Limited is in the business of plotted development. The company has entered into separate agreement for sale of land and for development of internal roads, landscaping, parks, areas. The turnover and ITC of the company is as follows. So basically in plotted development, you have sale of plotted land and then there are some amenities, some landscaping and all that thing, works contract is being done. So the turnover of the company is sale of land is 6 crores. Development activities 60 lakhs. Interest income 5 lakhs. Security sale is 2 crores, of which 1% value is considered for the purpose of Rule 42, 43, 2 lakhs. So total turnover which you have declared is 6 crores 67 lakhs. Declared as in, of course, your turnover is much more than that because of sale of securities. The ITC availed is as follows: brokerage on purchase of land 3 lakhs, brokerage on sale of securities 10,000, head office ITC 5 lakhs, works contract services ITC for development activities 15 lakhs, total 23 lakhs 10,000. Now, on the basis of the GSTR-9 filed by the company, see, this is the GSTR-9 filed by the company on the basis of turnover shown over here. Okay. Now, on this basis, the common ITC of 2310 is appearing in table 6 of GSTR-9. Total supplies are appearing in table 5 and 6 crore 67 lakhs. Over here, one dispute can be there whether this sale of securities 2 lakhs will come or not, assuming that company has shown that as an exempt supply 2 lakhs. Because that was our first question itself where we discussed that is not required to be shown. But assuming the company has shown that amount as 2 lakhs exempt supply, taxable supplies are 60 lakhs because the development activities are the amount on which company pays the tax. The sale of land 6 crores, the company does not pay the tax. In fact, on any of the amounts, it does not pay the tax except for the 60 lakhs. Okay. And so the exempt supplies appearing in table 5B is 6 crore 7 lakhs. Now, department has issued show cause notice saying that your 91% credit is to be disallowed, and therefore you are liable to reverse 21 lakhs of credit out of 23 lakh 10,000 which you have taken. So whether this department's stand is correct or not.
I think, sir, in your stand taken by department, I think you already know.
Yeah.
Then I have to explain.
Yes.
So I think Telangana has been issuing.
Absolutely. Yeah.
No, even here, Maharashtra also.
Telangana system related notices.
System related. I have got for my client in Hyderabad, same issue identical. Because of GSTR-9 data, they are taken up.
So over here, they are physically identified. Telangana, they are doing system related.
They believe there is no manual intervention required. System is. Yeah.
They already given up the GST law. It's only GSTN law.
You have to explain.
Right. So I think law is very clear that you have to identify taxable supplies vis-a-vis taxable credit and exempt supplies vis-a-vis exempt credit. In this example, if you see brokerage on purchase of land, brokerage on sale of securities, these are directly attributable to your exempt activities. So you will not get any credit out of this. Works contract for development activities, 15 lakhs, you should get full credit of that. And HO 5 lakhs credit, you will have to reverse on proportionate basis. That is where the proportionate reversal will apply. Okay. Next. Now, XYZ Limited is having following incomes in their P&L. Bad debts recovery. So earlier bad debt was recorded, now they have recovered, so they have shown it as an income. Some expenses were recorded in the books which have been written off. And some GST was not paid by the vendor, which the company has recovered from the vendor because it was not appearing in their 2B or 2A or whatever. So first question is whether the above recoveries are taxable under GST. If yes, how to show the same in GSTR-9. Anyone who wants to participate, please raise your hand.
So as far as bad debt recovery is concerned, for the expense that I put forward in the books and the expense is being reversed now. Tax was only paid at the time of making the output taxable supply. There is no further supply at the time of recovery of the bad debts. Financial transaction.
Right.
Second, expense being written off while it is not a supply, but the issue of 180 days, whereby if you have not paid, my vendor would come into play. If I have already reversed my credit on the 181st day, no GST implication on the expense.
Or maybe that expense is pertaining to some block credit where I have not taken.
That's okay. That's okay.
So in that case,
as long as only basically on the expense written off, it is only on the reversal of input tax as for 180 days cost, nothing else.
Again, no supply.
There is no underlying supply over here. And as again for GST not paid by vendor, the reversal of input tax will only come into play if yes, I have paid the input tax. There's a violation section 16(2). So I have to just reverse my input tax when I get to know that he has not paid it. But on the recoveries, there is no underlying supply. So this should not be.
Agreed. None of these supplies, none of these values will get reflected as an income or as a taxable supply. Now the question is how to show these in GSTR-9 9C, because it is part of your P&L. So where will you reflect it in GSTR-9? Whether you will reflect it or not? Because see, I'll tell you there are two options. If you see the next slide, in GSTR-9 table 5, 5F, it says non-GST supply, which includes no supply. You can show it over here. That is one of the options. Or you can argue, this is not even a supply, it is not even a no supply, so it will not get reflected over here at all. In table 9C, it will come as an reconciliation item or adjustment in turnover 5O due to reasons not listed above. So those are the two options which are available. My suggestion would be to show it in table 5 of GSTR-9, 5F as a no supply. So that there is no reconciliation item unnecessary. Right. I think no.
There is no such instruction. Which है?
5F.
5F में देखो.
Yes, sir. 5F में कुछ नहीं.
5F में नहीं.
Includes no supply, so the no supply we are discussed earlier that it will include only schedule 3 items. No supply means outside the non-goods, not services. It is called a schedule 3.
See,
those which are covered by schedule 3 will be only no supply.
So there can be other than that no supplies. No?
All these are example of no supply, but then they are nowhere covered in no supply in the act.
In the act,
has covered certain no supply items which are there specified. So these are items which are beyond act. There are no supply, but it's not in the act. Still, we need to disclose a better to show it as 5O in 3.9.
So see, in the act it is not there as a no supply. If you see no supply word per se has not been defined anywhere. Not defined anywhere. So it is subject to different interpretation. Okay, and I would say there is no hard and fast thing. You show it over here only, or you show it in 9C only. It is better to show it over here for practical purpose to avoid repo. If you have a repo item, unnecessary department may ask you question why there is repo item. You come and explain. You show me what are these things. I don't know. Department may also take a view.
They will come with no supply and repo also. They will ask for reversal also. So this is both. Repo will be there.
Repo will not be there if you show it in no supply.
I think problem does not end over here. Even if you show it in no supply, it will be very difficult to explain them that why vendor's recovery is not a supply. Right. You have to explain them that why it is not a supply. It is a much tougher task. So it's better not to show it in no supply.
5O में आएगा या तो 9C में 5O में आएगा.
No, why do this is
नहीं, there are 5A में starting
five A you start with your revenue from operations. No, revenue from operations. No, then start from revenue from operations, and all these adjustments are part of your other income.
But other income also we have to take. See, when we say
consider only the taxable supply items. No, you don't take all.
in that case,
नहीं, other income में तेरा बहुत कुछ है, interest income है, all that other income, everything you take.
No, everything you don't take. Pick up the things which are either falling of any of the type of supply. That's what you are trying to say.
So if interest income is a part of other income, it is an exempt income. You will take that. But vendor's recovery is not a supply.
While reporting in 5A, you will pick and choose and you will ignore.
5A you start only with revenue from operations. And all these other incomes like interest income, you add in 5O.
You can choose an add.
5O.
You can choose an add. You can choose out of
You can choose 5A is your revenue from operations.
5A is revenue from operations. Other incomes you pick and choose and add in 5O. That is what he is.
Again, 5O will be questioned.
Even this ICI
addition कर रहा है वो, डिविजन नहीं कर रहा है.
नहीं, but उसमें एक risk ये है, someone will question you कि you have taken 5-year figure, the starting figure you have taken is.
So ICI audit manual clearly says that 5 year has to be revenue from operations. They have clarified that in the audit manual which is there. 5 year has to be revenue from operations.
Okay, so that can be also one of the methods to not to show either in GSTR-9 or
much more difficult.
Our fraternity is not in complete concern agreeing to IC audit manual. Let alone the department officers whether they will agree. They don't look after their own circulars. For हमारे clarifications.
So anyway, when you upload the profit and loss account, there will certainly be a difference or the.
But your profit and loss account will always have a breakup of revenue operations and other.
I agree with you when you say that you are starting revenue for operations. But when the P&L will be there, that will have both items.
So it is easy to explain why you have not added rather than explaining why you have reduced. Okay. The reduction is always difficult to explain.
Fine.
Point taken.
Next, case study 10. Suppose XYZ Limited files GSTR-9C on 30th January 2023. That is after due date of 31st December 22. What will be the consequences? First, we'll discuss only this. Delayed filing of 9C. What are the consequences?
Late fees.
Late fees under late fees. So late fee under section 47, which is there on the screen.
No penalty.
Whether any general penalty for 9C or whether two penalties under section 47, that is for delay of filing GSTR-9 and for 9C.
You are contravening your section 44, no? So general penalty can trigger.
So one thing, principally, we need to check whether late fee and penalty can be levied simultaneously. That's all. 9 attracts a late fee, we understand. 9C may or may not attract a late fee, that's one question. And whether 9C attracts a penalty also.
So, if you see 125, it says any person who contravenes any of the provisions of this act or any rules made thereunder, for which no penalty is separately provided for in this act, shall be liable to a penalty which may extend to sanction. Now, the question is whether can we say for which no penalty is separately provided for this act? Whether late fee provides for penalty for this, whether that is a penalty or whether the late fee is just a late fee, basically a fee for the delay.
I is where you have contravened the provision. So I am not contravening the provision. I have filed the form. So there is no contravention.
Right.
Only I filed it late, for which there is always a late fee. So there is no question of general penalty.
Right. I agree to that. There will be no general penalty for that. The second
one, section 44 prescribes a time limit within which you have to file your annual return.
Right.
So if you are not filing return within that time frame, you are contravening.
The law provides that if you delay that, you do a late fee of you.
It's a contravention.
Okay. If that is the case, yes. If I delay in making payment of tax, I'll pay interest plus general penalty.
You pay penalty in section 73.
For the delay also?
Yes.
Or if I am paying on my own, yes. not being found.
So since you before show cause notice, it is waived under section 73, section 5.
That is what I'm saying. The late fee is already there for that. You cannot extend that general penalty to include anything under this act. For that, they have specifically got this.
I'll put it in other way around, sir. I have not paid the taxes for 4 years odd, and the department will come and catch hold of me. So they will ask for penalty under section 74 because there is a contravention.
Right.
Okay, you put for that I'm paying it today. Once I'm paying it, there is no contravention. It's not exactly going to work in that way.
So there is a difference. When you are doing it voluntarily and you have paid it, okay, so you have tried to comply with the section. When you did not pay for 4 years and when the department comes to you, you have contravened the section and you are complying only when the department came. So those are two different manner in which you read contravention. Contravention is that you have contravened the law, but having realized you did this. Now, you have not realized the contravention at all. So that's why the penalty is, according to me, you read the levy of penalty is always where, although the mens rea is presumed over here, but when you have suo moto tried to fulfill that particular provisions of law, by even paying the late fee, then the question of contravention and therefore penalty should not arise. That is my personal view. I personally feel that this should not be a tax.
Yeah. And
Sir, may I?
yeah.
Yes.
Please.
Sir, Architji, what you had said that regarding the returns and the late filing, but there was this circular which said na, ki 73 penalty won't be levied if you have sumo to file the return. And therefore, in such a case, penalty is not levied. But in this scenario, maybe contravention of the Act means section 44 deadlines, maybe penalty may be levied, I believe.
You're paying
So
late fee
you are
9.
No.
9C का क्या sir?
9C, so that is the point.
So now 9C is part of 9, no?
Yeah.
So it comes to
See,
44.
if you see section 44, it says, shall furnish an annual return which may include a self-certified reconciliation statement. So, and section 47(2) says, any registered person who fails to furnish the return required under 44 by the due date, then he shall be liable to pay a late fee of so and so, so and so. So basically, it covers both the.
So in a situation where I filed my 9 on the due date, but not filed the 9C on the due
So that is the next question in the case study. In the above example, suppose GSTR-9 is filed on 30th Jan, that is also delay, but 9C is filed on 20th Feb.
So
Then
30 days or 58 days.
right. So there will be 58 days. Because once you file 9C both, that is the time when your late fee will end. Will stop.
Okay, so when you have filed your 9 and 9C both, that is when you have complied with section 44.
Correct.
If you have not filed 9C, you have not complied with 44.
That is what I'm saying. So in this case, you will pay levy of late fee for 58 days and not for just 30 days. We'll move ahead, sir. Yeah. On scrutinizing the financials of LLM Limited, it has been noticed that company has following incomes which are exempted from GST: interest income, dividend income, and sale of land. The company has duly reversed ITC under 42 on account of income from sale of land. The company has neither reported the above exempt supplies in GSTR-1 nor in GSTR-3B. Now question is whether it is mandatory to show it in GSTR-9. If yes, how to disclose the same, and whether to include such supplies in HS and outward summary also. Okay. Right. So basically, if you see, these are exempt supplies. In a sense, dividend income is not a supply. Sale of land we have discussed is not a supply. Interest income is an exempt supply. So even if you have not shown it in GSTR-1 or 3B at the time of filing GSTR-9, you should show that. And secondly, now if you are aware, see table 17. Yeah, this in table 17 of GSTR-9, HSN wise summaries has been made mandatory. Actually, it is there in GSTR-1 also, and on the invoice level also that is mandatory. So this will also include all outward supplies, including exempt supply. Over there, the interest income HSN, which is 9971, can be reported. That can be used, right? And the next question itself in this says, I'll just come back to the question. LMN is having turnover of 4 crores by selling multiple products having different HSN. Now the HSN details are neither available in its system nor reported in GSTR-1 by the company. What are the consequences of not filling the information in table 17 of GSTR-9? So GSTR-9 I think will not stop you. It will definitely not stop you. If by the time of filing you are able to fill the details, it's best. Unless if you are not able to, we don't know where department's mind will go. Yeah. So basically, your table 17 will have blank figures, or you may identify at that point of time and fill some information in that, or you may keep it blank unnecessarily instead of showing some incorrect this thing. That is how you have to conclude and file the code.
So what will be the consequences? Whether they will be considering it as a
I think it will be, I think it's an incomplete return. It will be, system will not stop you from filing it. Department may question you, But at max it's a procedural lapse. There is no evasion of tax or there is no short payment of tax. It's only a disclosure which you have not done. That is the only lapse at max.
So whether they can call at the time of adjudication, the details.
Yes. Yeah, they can ask you. At that point of time, I think at least at that point of time, the SSC should suffice that data. They should provide it by. Because this requirement is now there in GSTR-9 and also on the invoice it is mandatory. So, yeah. I know. Many this thing are not following that practice. Yes.
So in some cases, what we have observed is that the details which are optional to be filled for the previous periods, that information also department is asking. For example, table 14 of 9C, it is optional. But in some cases where audit is going on, department is still asking for details of table 14 and you have to give it. You don't have an option.
Yeah, particularly
Yes, you will say.
Sir, in this table 17, we have to mention taxable value. So do you need to give your exam, like interest income details on this table, because taxable value is zero only.
So the taxable value will be zero.
So then
17 does not.
The table which you have attached in this, no? So then there will be nothing in that case. There is no quantity, only excess and taxable value will be zero. So is there any point giving exams of the interest in table 17 that case? Or we can ignore it?
Especially for services, there is no quantity as well.
Yes,
For goods, at least, there could be some quantity disclosures for
That's what we have
the
said for services. For a normal services taxable, you write UPC as.
That's okay.
So the question is, for exempt supplies, whether this HSN
have the rules which are exempt. We can't leave that by side. So that is when you go legally for, you are supposed to fill up that. For interest also you have an HSN code, right? SSC code. So
in the subsequent.
yeah, so for services also there will not be any UPs, no?
Yeah.
There also you will follow one system. Either you put one or you put it back. Blank data, but you have to put one. One is the one.
That's why.
So the same will go for an island, that they were earlier showing the error that the taxable value is zero. There is not allowing us to even so that the extent for the
I think that is the I have to check. That I have to recheck.
I think so we are.
Yeah, we are done. Thank you.
Thank you so very much to our. Yes.
Excuse me, कुछ बात
I think the same question asked by ma'am has been put forth earlier also by Mr. Sunil Kumar Shah, whether HSN also exempt supply like interest and non-GST supplies like dividend and all petrol, diesel needs to be reported in GSTR-9. I think non-GST supply is not covered over here. Only the exempt supplies will have to be reported as put forth. The exempt supply HSN will have to be reported. The taxable values may be zero, but the HSN and the quantities will have to be put forth in table 17.